Welcome to another MBS Highway live monthly webinar series. I'm your host, Megan Anderson, and today's special guest is William Lebaron. And when he's not finding an excuse to fly across the country in his 1965 Mooney, William manages the sales and marketing teams at MonitorBase. He was previously an LO for 5 years. He's been with MonitorBase now for the past 6 years. And in that time period, he has grown the client base from just 6 clients to over 200 lenders, banks, and credit unions using the software. And today he's going to teach us how to generate leads and build better relationships. Welcome, William.
Thank you so much, Megan. I am very grateful for the opportunity to be here.
I am excited for you to be here as well. You know that the market has been slowing down quite a bit. People are starting to feel it. They're starting to freak out. And so how can, managing and utilizing your database help?
So it's a really good question. One of the things that I think people have to realize is their database can really expand past really what they initially think of it as. So when we say database, a loan officer thinks my past clients who I gave a 2.75% interest rate to, and why on earth would they be in the market for a mortgage right now, right? So there's a little bit of reluctance around that. And I think for loan officers, a lot of it is mindset shift in thinking, okay, your database is actually more than just those people, but also not just having preconceived notions about what's happening in those people's lives, because there is more activity and more opportunity in that past client list than most loan officers realize. And so I think that's a big part of what loan officers can start thinking about when it comes to a database is those two things. It's like, who might be in the market and who am I discounting that is, in the market, and I just think they aren't. And that's part of where I think our software comes into play in helping find those opportunities.
And we know with rates being higher that, refinance volume is down, but I want to talk about, purchase opportunities. How can your platform managing the database help find these potential first-time home buyers?
Okay, it's a great question. So, well, first, for finding first-time home buyers, you really have to have the right set of people in your database. And a lot of loan officers are they're like, no, it's just some of my past clients in my CRM. And what we're saying is pre-quals are, credit turndowns, other lists of people can be in a marketing or a monitoring software like our system. So if you're not familiar, just like in one sentence, what MonitorBase does is we mine for opportunity in your existing contact relationships, things like credit trigger notifications or those kinds of things. So there are solutions out there beyond just what we offer, but what we advocate for is, like, in the past, we've been thinking, let's capture refinance out of our past clients. Let's capture purchase business out of our past clients. But 30% of transactions in 2023 are really expected to be first-time home buyers. So it's a realm of, it's a space where a lot of you guys are probably sitting and thinking, okay, that's a lot of opportunity, but how do I actually tap into that? And for us, we're saying, expand your mindset of who you're going to be marketing to and monitoring. And that means, phone contacts, email contacts, Realtor Partner databases, lists of people who you haven't already given a loan to. With our software, the reason we think it's a valuable match, or softwares like ours, is that they find that opportunity in that set of people. It's taking a big list of people and saying, these are the ones that are in the market. So I kind of want to nerd out for a minute on the data side of things, because it's really incredible what you can do from a data perspective in finding opportunity. So if you give us a list and say you upload a list of your phone contacts, and most people have like 2,500, 3,000 phone contacts in their phone. And what you don't want to do is start blasting all those people with blast text messages and emails and all kinds of, marketing for products that they're not in the market to. But what we can do on the monitoring side is we take that list of people, we match it up to the credit bureau, and you might say, hey, give me first-time home buyer alerts out of this list of people. And we're going to look in there and say, okay, you gave us 3,500. These are the ones that have never had a mortgage before. And then we start looking, because those are potential first-time home buyers. And then we narrow it down further. How many of those are currently meeting your credit standards? How many of those that have never had a mortgage currently meet your credit standards? are showing indications that they're interested or likely in the market, or have been in the recent past, in the past year or two, tried to get a mortgage. So you can see how, as you start to layer, filtering onto that set of people, which is really what we specialize in, is you're finding a smaller and smaller set of people who are more and more likely to be in the market. So it's taking a big list and really narrowing it down to a few. And what we find for first-time home buyer in particular, there are really consistent patterns in how they are preparing for purchasing a home. The first-time buyer has a credit pull 3 to 4 times during the first-time home purchase process. That is generally going over more than a 12-month period of time. During that period of time, they have a specific set of patterns of debt, paying off debt. And oftentimes, paying off debt can be an indication that someone's finally taking their finances seriously, or it can be an indication that someone's got, more income than they've previously had. Both of those are really good indicators of someone being interested. So what I'm saying is, on the data side, the way we find first-time home buyers is we have a profile, we have a behavior pattern, and we can model for that and say, hey, you gave us a list of phone contacts as an example. These are the 20 or 30 this month. They're really hitting that profile of behavior, and they're very likely to be first-time home buyers in the next quarter is kind of how we look at it.
And is 20 to, I know it obviously depends on your age, the contacts in your phone, but what would you say is like the average if someone were to give you, 1,000 contacts, that those would be first-time home buyers, or a trigger for that?
Yeah. So, out of 1,000 people, just average database, right now it's about 0.8% of those, 0.9% of those enter the market, have their credit pulled for a mortgage each month. So that's one indicator of in the market. As far as finding like specifically first-time home buyers, that might be about 0.5% of that population. If you include inside of that first-time buyers and current home buyers that are just looking like they're likely to be purchasing a new home, likely home sellers, like that's where you start to get probably a 1.5% of your database is a likely first-time buyer, just a standard home buyer, or a likely home seller. So it's about who you bring to the table and what kind of activity you guys are, trying to receive opportunities on.
Now, okay, I'm a loan officer. I'm set up with MonitorBase. I want to get these triggers for find first-time home buyers. After, I do that and you guys come back, okay, these are, the potential first-time home buyers based off of what we're looking for as far as triggers. Do you guys have any kind of like follow-up to help nurture that?
Okay, this is where we are really a credit partner, and we execute the compliance side of giving you the data. So when I say, hey, Megan, William had his credit pulled for a mortgage, or, William's a great first-time home buyer candidate. We notify you as the originator. We send William an offer of credit on behalf of you. So it's, personalized, and that offer of credit is through direct mail and through email. And then, if William opens the email, you can get notified, that kind of thing. But from there, that really is the end of what MonitorBase executes. We're very much focused on the compliance side of things, which, it's the reason you and I are on the call. And it's what I love about your guys' platform. You guys have amazing engagement tools for that particular strategy. So we're going to do our data aggregation. We're going to find the people that are in the market who you should be reaching out to. We're going to send them the firm offer of credit. And really, at that point, MonitorBase dusts our hands off and goes back to the data nerding out and finding people in the market. And we leave it to platforms like, MBS Highways tool sets to as engagement metrics. So I don't know, what I've really loved and I've gotten great feedback on is loan originators being able to take that. Okay, it's a first-time home buyer. You look at the credit profile, you look at their debt, you get to know or understand that person a little bit, and then you reach out to them and try and communicate opportunity through some of the tool sets you guys have.
Yeah, that's a great point. We do have a lot of tools specifically talking, about that first-time home buyer. mostly all of you that are on the call today, you're going to have access to these tools. I would use, the cost of waiting analysis. I would use that buy versus rent scenario, and the real estate report card, I think, would be really valuable ways to follow up with that potential first-time home buyer. I also just want to point out, I know someone left a question. For some reason, I cannot see the questions box. It's not popping up for me, but I can see the chat box. So if you guys have questions, if you could utilize the chat box, I'm going to go ahead and put my email in there just so you can see where it is when it pops up, and go ahead and utilize the chat box versus the Q&A box, because again, for some reason, it is just not popping up for me.
Okay, someone says chat is disabled, but I found the Q&A box. So the question was,
read them. Great.
The question was from Scott. He said, did this just start? I hopped in at 11 and it seems to be a ways in. I think we started right on time, so it must have just seemed that way. But I don't think you missed anything, Scott, if you were here at 11.
You will get the recording afterwards if you did miss anything. So be sure to be on the lookout for that as well.
And I guess you brought up the, cost of waiting analysis as an example. One of the things that I'm finding, and we work with about 14, I guess it's about 12,000 loan originators. We monitor about 15 million households. Wow. So we have a lot of insight into what's happening inside of the market today. And I don't know, I think what we see as we're dealing with some of the users and the loan officers using our system is they're looking at it and they're really nervous, because it's like, okay, you told me this person is likely in the market for this. And I don't personally see the value or why they would do that, right? And on our side, we recognize we're data people and we're out here trying to doing our best to find opportunity, and we're not always right, but we are very often right. And I think if you make assumptions as an originator when you're reaching out to someone, you assume that you gave them a 4% interest rate however long ago, or a 3% interest rate, and they're probably not in the market right now. I think you can get yourself into trouble, because the truth is there are lots of reasons people get a loan. I mean, obviously first-time home buyers, that's going to be about 30% of the transactions, but you still have a bunch of people who are looking at the current market conditions and they're seeing the fear, but they recognize some opportunity in that. I'm personally one of those people. I've got a sub 3% interest rate, and I'm considering selling my home to purchase another home, because I look at it and I say, I can still get quite a bit of value out of my home. And when I look at the marketplace, I think the fear is bringing prices down. So I can get what I would like out of my house. And I think there's opportunity in the market. And that is way more common than people realize. Another example, I mean, Megan, I mentioned this earlier. Just yesterday, my brother called me to talk about why he should or shouldn't be doing a refinance right now. And there are reasons people are doing those transactions. And it doesn't make sense to us when we look at it just as a whole, like, yeah, most people aren't doing refinances, but I think we have a poll on. I think we have a poll. I'm kind of curious on the group if you guys will do this poll. It's a question about what percentage of your volume. Well, I guess it's two questions. So
I just launched it. Go ahead, answer the poll. By the way, I've never done a poll before, so this is the first time for us, but you'll see the questions. What percentage of your loan volume would you estimate comes from realtor referrals? And then the other one, which we're talking about right now, of your production this year, what percentage comes from refinance? And it is coming in right now. The numbers are changing.
All right. So I was just curious because I found that people are surprised by the answer, by the actual answer to these questions. And so I thought it would be interesting to put these out there and ask the group, because it's a big group and we'll get some interesting feedback on what your guys' sense is. But particularly, I guess the one I was going to bring up right now, the percentage of your production that is coming from refinances this year. A lot of loan officers are coming to us and they're saying zero. Nobody is refinancing today. And so I'm kind of curious where it's going to come out.
Right.
I don't know how long
now, and it hasn't changed too much right now. Everyone's answered for the most part, 0 to 10%.
Yeah. So, and that's totally what I expected. And don't attack me here, guys, but we monitor 15 million households. we see, and it's across all 50 states, we really do have a good insight. And we're seeing about 20% of loan transactions today are refinances. And last month that was 30%. And Megan actually called me out on that. She was like, I don't think that's true. So we went back and forth on it a little bit, but more of it is happening than you realize. And I understand why people would step back and say, okay, that's not my priority, is not capturing refinances. But I think that's fine, but don't miss out on opportunity by dismissing it completely is what I'm really advocating for. And, cash out, it's still happening today because some people are looking at it and they have other reasons to do that cash out than you realize. A big one is, I'll use Megan as an example. Megan might own a home, do a cash out transaction because she's planning to sell in 6 months. And it just does not matter that she's going to be at a 7% interest rate during that time. She's trying to do some debt consolidation. She's trying to do some home improvements. She's preparing for her next purchase. And that's just not something that you see on the surface level when you look at it and say, I don't think Megan needs a cash out refinance right now. So just a couple of examples. I am curious. Funny enough, I don't get to see the poll results.
Here,
so
I'm gonna share the results right now.
Okay, perfect.
You guys can see this?
Yeah, 23% of you said between 15 to 30%, which would be close to accurate. I mean, I would consider that accurate. And then 72% of you said 0 to 10%. So to me, what that tells you is 73% of you are likely missing opportunity in that category, and totally understandable why. But from a data perspective, that's what we're seeing in the marketplace. And it's one of the reasons I like what we do. We just get insights that you wouldn't ordinarily get.
Well, speaking of these insights then, and potentially missing out on opportunities, we talked about the triggers that you guys have for first-time home buyers, but what are the triggers that you look at as far as refinancing?
Okay, yeah. I mean, we literally have thousands of data points on these people. But what we offer, obviously, like the easiest one in the world is this person had their credit pulled for a mortgage. That is a reach out, engage. They're looking for something, right? So that's going to capture both purchase and refinance. And that's really a defense play because they've already started the process with someone else. When we move into what we consider predictive analytics, we're trying to get out there ahead of and in front of them entering or starting a transaction. So that's where we look at things like equity, debt utilization, current loan program, whether or not they have mortgage insurance. But a lot of that it's patterns of debt utilization from a refinance perspective right now. Obviously, there's not a soul out there doing a rate reduction refinance. We recognize that, but there are people out there doing debt consolidation. And generally the patterns that lead up to a debt consolidation type of transaction end up being basically a growing utilization of their debt availability. Their credit card balances are going up across the board. Mm-hmm. Compare that, or I guess match that with somebody with a good credit profile, because that's really important to get cash out, and a really strong equity position, which is most people right now. And then, as you see those, there's just statistically significant points where it's like, yeah, that person would benefit. And you guys have the tool set that makes a more compelling argument than we make. Like we just say, you may not believe us, but there's a 20% chance this person is going to have a new mortgage in the next 4 months. Like, take it or leave it. I think you guys have the great tool set that actually gives the compelling reasoning behind it, though.
You do. If you guys were to get a trigger on that and wanted to follow up with that potential lead, I would definitely recommend the debt consolidation tool and the refinance comparison tool as well. For sure. And I think we have recorded, like we've done trainings on this with MBS Highway before, as some resources that you can probably find. Here's why I love MBS Highway's tool set. We're in a really scary marketplace, right? There's lots of uncertainty, and you guys are feeling it as loan officers, as people in the mortgage space. Your clients are feeling it just the same, if not worse. And what we're seeing in that space is people are having a hard time making decisions. And what MBS Highway does really well is it takes a lot of information, it condenses it into digestible chunks that make sense. It lets you compare complex options to each other. And so when you're looking at this,
and you're thinking, how do I actually, how do I talk a first-time home buyer into getting a 7.5% interest rate? How do I talk, and it's not even talking them into it. How do I help them decide whether this is the right decision for them or not? And it really doesn't, I shouldn't have used that term. It really isn't about going out there and selling something someone doesn't need. It's about giving them the information they need so that they can make the best decision for themselves. And it's a very complex equation, and you're suited for it way more than the borrower is suited for it. So it's about helping them consider the right elements. So I don't know, go ahead.
Well, I was just going to say, at MBS Highway, many of you have been watching the morning update videos, listening to us speak about our market outlook. And as we continue to fight inflation, as the Fed comes in, raises the Fed funds rate, we're starting to see signs of inflation in different areas start to come down. And again, with their next meeting, where we're thinking that the Fed is going to hike the Fed funds rate another 75 basis points, that should help even more help fight inflation. There's going to be a point in time where inflation starts to come down. And as you guys know, inflation determines the direction of mortgage rates. And Barry always says this really great analogy, like that I like to utilize, is imagine that you guys give me a mortgage, right? And my payment to you is $2,000 a month. So I give you that every month. And with that, you go and you get a list of goods and services. And everything is great for a while. You're able to get everything on your list. But after a while, due to inflation, things costing more, you're not able to get everything on your list. But since it's a fixed payment, you can't come back to me and say, hey, you know what, I'm going to need $3,000 a month. No, it's a fixed payment. So what do you do to protect yourself going forward? That's why mortgage rates move in the same direction as inflation. And as we see inflation come down, we should start to see rates alleviate. Now, I want to talk to you about your triggers because while yes, there are still refinances out there. Yes, they have been slowing. There is going to become a point in time where we do see rates decline and a lot more refinance volume is going to be happening. Is there also a trigger in your system that notifies them when you can get them and ultimately a lower rate?
Absolutely. And it is designed to take into account a couple of things. So I guess when we are looking for somebody that can get a lower rate, we're looking at what their current rate is. So whether you actually close the loan for them or not, we can find out that client's underlying rate. Because we're a great data partner, we know that and we'll get it for you. But once we see their underlying rate, we compare that to the market rate, as well as their credit profile, their mortgage insurance. And what we're going to actually come out with is an alert that says this person is statistically very likely to do a rate term refinance. Again, we look at 90 or 120-day windows. And so we absolutely have that in there. It's designed to automatically start capturing those as soon as we have a shift. And you really don't have to provide much information to us. I kind of wanted to answer Tom's question over here. He said, when uploading a database, what minimum data is required in order to be monitored? The answer is name and address, name and email, or name and cell phone. So we don't require you to give us any other data points. We have access to just incredible amounts of data. You give me a name and address and I can tell you just about everything about Megan's finances. As an Experian partner, we really have untethered access to incredible amounts of information. And so part of our system is taking that data and turning it into something actionable and useful, like a rate alert. And then obviously it's your guys' job to quickly seize that opportunity before someone else takes that client and gives them a lower rate, because there are lots of people just waiting. All those direct to consumer teams, they're either quitting or they're waiting very patiently for the exact scenario that you're describing.
I love it. And many of you on this call might be, thinking, why are we talking about refinancing so much? But at the end of the day, and when we were in the green room yesterday and we were kind of talking about everything that we were going to discuss here today, you brought up a really great quote about the fact that obstacles at the end of the day are opportunities. And I really feel like we all need to get into that mindset that even though things are a struggle right now, and listen, many of you have been in the industry for a long time, you've gone through these cycles, you know that this is just another cycle that you got to get through. There's going to be another side. But the thing is that every time these obstacles come up, instead of sitting there, complaining about them, worrying about them, being afraid of them, realize that this is an opportunity for you to get better at what it is that you do. And the reason that we're talking about refinances right now and having these different triggers set up is now is a great opportunity to make sure that you have everything set up so that you can capture that business when rates do come back down. And so I think that it's really important, everyone on this call, to just sit and think, okay, I know that things are hard right now, but where's my opportunity to grow? Maybe it's in education. Maybe you should take our CMA course, understand the market a little bit more. Maybe it's to better manage your database with MonitorBase. Maybe it's, whatever it is, hone in on what that is and make sure that you are taking efforts every single day to improve that. Because I'm telling you, every obstacle at the end of the day is an opportunity in hindsight.
I really do love the quote. And one of the things, I guess, that I wanted to chime in with that we're having a lot of people ask about, and that is, how do you use the tool to start engaging realtors? Because we all know, and it was one of the polls. I don't know, can you bring up the poll results again?
Yeah.
Because we all want to start engaging more realtor partners, pull more of our business from that, because that's where we used to get most of our business, pre-COVID market refinance boom. And then we all were so busy, it was easy to get distracted from that. And so a lot of people are swinging back in that direction. But our poll results came up and it said the distribution was about 46% of you said 75% of your business came from referral partners, 22% at 50%, 23% at 25% of their business. So it's about half and half between, I guess, in that spread. There was a study that was done on this, and it basically came out and said most loan officers estimate on average that about 40% of their business comes from a referral partner. But when you actually really analyze it, it ends up being only about 13%. And I know that sounds outlandish, but most mortgage or I guess real estate transactions, it's only about 21% of real estate transactions originate and begin with a realtor conversation, a client engaging a realtor as the first step. So when we talk about strategies, I think it's important to look at and calibrate and understand at a granular level, as close as you can, where your business is coming from. And if you can assess that, that will help you prioritize really where you should focus, what you should be investing in, which systems can be optimized the most to capture more opportunity. But I just like the statistic because people don't believe it. And I always think that's interesting to challenge beliefs, and it just makes people pause. But when it comes to a realtor strategy that's working today, our system, I mean, Tom asked what data can be monitored. If you have a phone contact list, an email contact list, a CRM contact list, that is data that you can monitor and find opportunity in. And when I say you, I mean you as a mortgage loan originator. Realtors don't have access to the same data. So you can actually function as a partner with them in monitoring their database, finding opportunity and referring those opportunities back to them as you engage them. And that's really a strategy that we're seeing a ton of interest in, just because you're scrambling for business and your realtor partners are, and you're trying to find out ways to build value, to land more realtor partnerships. And that is a way that you can do it that they don't have access to. And then you're bringing them a first-time home buyer, or you're bringing them a home seller out of those databases. And you can do it with your database, or you can do it with your database and their database. And that's a technique that I think is going to be relevant today and into the future.
Yeah, I mean, what person would not want to be referral partners with you if you're bringing them deals? And not only bringing them deals, but as you're bringing the deal, bringing them the value of what you guys have within MBS Highway as well. I think that is a game changer. Have you guys done any stats on measuring, how effective this has been?
So we don't have, let me think if the case study, I don't really have the case study behind it. We're relatively new in that space, just because historically we've been very nervous about that realtor relationship with data exchange, because data is a thing of value. But we've worked with some attorneys to figure out what the right way is that you can navigate working with a realtor and getting their data from them in a compliant way, and then monitoring it, and how you can sit there and, create that system. So it's relatively new. I don't have a huge case study on it for actual like ROI, but I can tell you what our users that are using that system have told us, particularly for the first-time home buyer approach to that. They've come back and they said, a first-time home buyer is not a great lead for a mortgage loan officer. Those people take a year to close on a mortgage, and it's really hard to, pay the bills on a 1 year lead time. But they're like, but we love it because I take a first-time home buyer and I refer it to Megan. She's a realtor partner I want to work with. And then I send her another referral, and I get a 3 or a 4 to 1 referral ratio back. For each one I send to her, I get 3 or 4 deals back. And these are people that are significantly further down that home buying process. They're oftentimes not first-time home buyers. And they're like, I don't care if that person takes a year to close a loan. I'm actually getting way more value in the reciprocation in the partner relationship. And that's the mindset I think that you should approach that with, particularly with first-time home buyers. I mean, first-time home buyers are hard. Those are the most challenging loans to work with. And we're in a market where I think we have the capacity to work with those people. We're not overwhelmed like we were last year. We have that back-end office capacity to do the loans. And it's a question of how do you capture those and then start strategically turning that into, it's fine taking one deal and turning it into 3 or 4 other deals coming back to you. That I think is really the secret to that particular strategy.
What I think is so cool is, just originally you guys starting out, you come up with, various triggers, and then there's all these creations of new ones because you have the data.
Yes.
Is there anything, that you guys potentially have on the horizon of a new way to use this data or anything like that?
Yeah. So funny enough, you guys, I don't think we talked about this. So it's funny that you ask. You guys put out the stat. It's about, was it 16% of current transactions? It's 1 in 6 transactions are investors.
Oh, yeah. Mm-hmm.
And so you have your new investor tool. And when our CEO saw that, we are now down the road working on a investor alert. So this is somebody that's likely to be in the market to be purchasing an investment property, just because it's like, that is a big untapped opportunity. And so for us, it takes some data modeling. We have to identify those and look at the patterns of behavior, but we're in that process of making that regression model. And then we'll start delivering, hey, these are investor opportunity alerts, somebody that's out there buying an investment property. And so that's an example of how we adapt to the marketplace, obviously changing rates, but that particular one, it originated from your guys, from the MBS highway update.
Wow.
And we were like, that's really cool. We should absolutely have an alert for that. And now it's in the works, and you guys, our users will be seeing it, I think, this quarter.
Wow, that is absolutely amazing. Love that MBS Highway could help with that vision, that idea. That's super powerful. For everyone that's on the call that's getting super excited about this, how can they learn more about MonitorBase?
So it's a good question. I don't know if you can show the slide or should I? I just have a little screen.
You can share the slide if you would like.
Okay, I think this is the right one. So we put a little thing together. If you guys go to this, it's going to ask a name, email, and phone. And if you submit, we're going to flag your submission, and we're going to flag you that you'll get your first 2 months free if you're a new user. But if you're already using the system and you have questions, if you want to reach out, it's just a way for you to say, I would like more information. And if you do just decide to use our system and you're not currently using it, you would get your first 2 months free. So it's a QR code that will take you to that form, or I think you can put that link in the chat is disabled. So I'm not sure how. I imagine that I think there's going to be a link in the recorded distribution.
There will be a link in the recording. There will be a link in the email that gets sent out to you guys afterwards that you'll be able to click on. And can't see the chat box. It is in the chat box.
Well, I have the chat box. I don't know if everyone can see the chat box. I imagine they probably just can't send messages. But really, guys, I think on our side, we're making, we've got the tool set here. We actually have amazing sets of playbooks and instructions. So it's not like, hey, get this data and good luck out there with it. We have a lot of resources on exactly how you should follow up with these opportunities. We've been making resources for months now, how each of our alerts pairs to different MBS highway tools. And we just do this because we love the tool set. We don't have a business affiliation. It's just, it's a synergy. And so we're trying to make the resources so it's easy for people to use and execute and create value, particularly right now. It's like over the past couple of years, people were so busy. They weren't looking for more opportunities, more origination opportunities. They had plenty of those. They needed a processor. So, if you know anyone that needs a job, that was kind of, get on a sales call. But that was what people would say. They're like, I don't really need more leads, but do you know anyone that would like to be trained as a processor? Today, that's not the case. And so we've developed a ton of resources into making this as easy and as plug and play as possible. Our system really isn't designed to be, log in, learn a whole new platform and have to change your life. It's designed to grab your database, whether that's from your CRM or your LOS, function in the background and let you do business as usual, but you'll just start to receive that intelligence either in your CRM or as a text message or so on. So I would recommend, to learn more, fill out the form. We've got a great team that'll follow up with you and reach out, give that to you in a meeting, in recorded content, in print material, whatever works best for you so you can learn more about the platform.
And you guys can go there to learn more about the pricing. I know we had a question on it, but in general, I think it's pretty, however much you want to put towards it. Doesn't it go by the amount of trigger leads that you're looking for or something similar?
Yeah. So for a small team, like if you're a broker and you say, I want to sign up for an account, you could monitor about 1,000 people for everything that we do. And you would spend around $100 per month right now. And that ends up being, $2 or $3 per notification is kind of where that average is out. If you were a bigger team, that price per notification gets lower. So a lot of the times it's like, it depends on what alert types you'd like. The easiest way to think about it is when we say, hey, Megan had her credit pulled for a mortgage, we're going to send Megan a letter and an email. And usually each of those notifications is again in that, $3 range. So it's kind of complex because you might not want the home buyer ones. You might only want the credit trigger ones or the credit improvement. But if you think about it from the, hey, we're going to tell you something that meets your credit standards and in the market for this reason, and you pay $3 and we sent them a letter, it's easy to see that it's a very cost-effective way to go and capture business.
Well, I love everything that you guys have done here. And I think that really just our conversation has hopefully allowed all of you that are watching right now to shift your mindset a little bit and start to see all the opportunities that are available to you. And, let's just keep squeezing this lemon, get as much as we can out of these leads that we currently have. And, William, is there any last words that you want to leave with our audience?
I really think the quote was great. And I think the way the quote goes, and I'm going to ruin it because I should have looked it up first, but it's like the difference, or an entrepreneur is somebody who realizes that there's very little difference between obstacle and opportunity. And I think there are a lot of people out here who they jumped into the mortgage industry because it looked like easy money. And there are a lot of people that are jumping out of the mortgage industry because they just got burned. And there's opportunity in the current environment that we're in. And I think it's a patience game. I think if you can get your mind right and, adapt to the current market, knowing that things will change, you're all going to win. That really is my opinion of what we've seen since 2008 in the mortgage industry, which is when I started. It's cyclical and lots of people get in and then they get scared and they jump out. And the people that stick with it and adapt and really it's sticking with it and building systems as you go, you're going to win. And next boom, you're going to do better than this last boom. And I really believe that. That's what I've seen. And I think that's the opportunity that we're looking at today.
All right, you guys heard it from him. We've got this. Hang in there, be strong. And with that, I want to thank you, William, for taking time to be here with us today. And thank you, everyone who decided to tune in.
Thank you so much, Megan.